Hello friends, Christian Carter from Radius Financial Group, and today we are talking about business bank statement mortgages, the wonderful, wonderful world of business bank statement mortgages, right? So we're going to talk about what that is. We're going to talk about some pros and cons, talk a little bit of something about something called an expense factor, which is interesting. Of course, we're going to go over some examples because I love examples. And then at the end of the video, we're going to do some frequently asked questions. So without further ado, let's dive right into the wonderful world of business bank statement mortgages. Here we go. Buckle up. All right, so let's get right into it. First off, what is it? What is a business bank statement mortgage? This is designed specifically for self-employed business owners, right? And we're going to use your bank statements in order to verify your income, right? So we're not going to use tax returns or W-2s or pay stubs or anything like that. We're just going to use your business bank statements, right? Now, it's also important to note that this loan can be used for a primary residence, so a home you're going to live in. It can be used for a second home, like a vacation property, or you can even use this to buy an investment property, right? How does it work? Super simple. So essentially what we're going to do is we're going to collect the most recent 12 months worth of bank statements, right? We're then going to go through those bank statements and come out, basically see all the money that's going into that bank statement or those bank statements, so we can get an accurate depiction of like a gross monthly revenue from those bank statements, right? Hope that makes sense. Now, real quick, we're going to go over some pros and some cons, right? So pros, obviously there's no need for tax returns. There's no need for W-2s. So hypothetically, let's say you have a construction business, right? Let's say you build decks and your tax returns don't exactly state all the income that you make from that business, right? It doesn't matter with this program. Because we're not collecting W-2s or tax returns, we don't really care how much money you're paying the federal government in income taxes, right? And then also, with this program, you potentially might be able to qualify for a higher loan amount than a traditional or conventional mortgage, right? All right, now let's go over some cons real quick. These are the big ones, obviously. It's definitely going to come with a higher interest rate, a larger down payment, and a larger reserve requirements, right? So you're going to have more money in order to use this business bank statement mortgage program. All right, eligibility requirements. These are the big ones, questions that people always ask, right? And as you'll see here, there's a wide range between credit score, down payment, and reserves. It's going to matter on, are you buying a primary residence? Are you buying an investment property? Things like that, right? So these are general guidelines, right? So as far as a credit score, you're going to want to have between a 620 and a 700. One quick note right here, if you are buying or if you are using this program to buy your first investment property, you don't have any other investment properties, the minimum credit score is going to be 700, right? But if you're buying a primary residence or something like that, you can go all the way down to 620. Of course, it's better to have better credit than lower credit, right? Down payment, again, anywhere from 15% to 30%. And then the reserve requirements, anywhere from 3 to 6 months worth of reserves. Again, as a general rule of thumb, we'd like to tell people that you should have at least 6 months worth of reserves, really, in order to use any program, right? Because that's just a good rule of thumb. Not a hard and fast rule, though. All right, this point is important, the expense factor, right? So we talked about how we're going to look at all the income, right? All the revenue that's going into your business bank statement. How do we decide how much money is going out? We're going to use something called an expense factor, right? And the expense factor is just like it sounds. It's a percentage that lenders use to account for business expenses, right? Typically range anywhere from 30% to 50%. And I want to hit real quick on here about service-based versus inventory or operational-based businesses, right? So think about it like this. A service-based business, let's say you're a consultant that works from home. You have no inventory. Maybe you have a home computer or, a business computer, and that's about it, you do most of your consulting over the phone or via email, not a ton of overhead, your expense factor is going to be very, very low. Now let's go back to that construction owner, right? Let's say he builds decks and things like that. That's really going to be operational based because he's got to buy lumber, he's got to buy fasteners, he's got a crew to pay, right? So the construction company is going to have a much bigger expense factor than someone who does like consulting. Okay, hope that makes sense. Last off here, we're going to go over a quick example of how we apply this expense factor, right? Again, let's stick with the scenario of you own a construction company, you build decks, additions, whatever. We determined by collecting your 12 months worth of bank statements that on average, you deposit about $10,000 per month into your business bank account, right? Because you're in the construction field, we're going to take an expense factor of 40%, right? So $10,000 times 40% equals $4,000. Pretty simple math, right? That is going to be our expense deduction. So we're going to take your monthly deposits of $10,000. We're going to subtract $4,000 due to that expense factor or expense deduction. And that leaves you with a net income of $6,000, right? This is also, you'll hear it called your qualifying income. So when we go to qualify you for a mortgage using this program, we're going to qualify you at the rate of $6,000 per month. I hope that helped, and I hope it was informative. All right, now let's get into a couple frequently asked questions. I think we have about 4 or 5 that we normally get on this loan program, right? So the number one frequently asked question is, what is the minimum loan amount? Right now, the minimum loan amount is going to be $125,000, right? That is our minimum loan amount for this bank statement mortgage. Another question that we get all the time is, can a foreign national use this program? Unfortunately, no. In order to use this business bank statement mortgage program, the borrower needs to have a social security number. Another great question we get all the time, can gift funds be used for the down payment? And the answer is kind of yes and no, right? So with the business bank statement mortgage program, we do allow gift funds, but that is only if you're purchasing a primary residence, right? If you're purchasing a second home or an investment property, no gift funds whatsoever are allowed. And then the last question is, do we have any interest-only options with these programs? And yes, we do. So we actually have a 30-year interest-only option, and then we have a 40-year interest-only option. So if cash is tight, especially in your business, we do have, a 30 or even a 40-year interest-only option, which will really lower that monthly mortgage payment. All right, that's all she wrote. I hope you enjoyed the video. If you did, I would love it if you can give it a big thumbs up. That really helps me. What also really helps my channel out is if you could subscribe, if you tend to like the majority of my videos. And then most importantly, if you want me to cover another topic, mortgage or real estate related, please leave it in the comments below, and I would love to shoot a video on that topic. Other than that, thanks for watching, and I will see you later. Adios.